Hello and welcome to Business Reporter's Digital Transformation Campaign. I'm Alistair Greener. Although there are signs of digital transformation gathering momentum in the insurance sector, we often find pockets along the product cycle where manual solutions still prevail. With me in the studio is Ryan Jones, CEO of ThreatInformer, to talk us through how brokerage and underwriting can be enabled by automated cyber risk assessment. Good morning.
Good morning.
Automated risk assessment for cyber insurance sounds like something where you're going to need a multitude of skills. So what specific technical knowledge do you need to be an expert in this area?
Absolutely. We've brought a team together with lots of different experience in this area. For example, we have staff members who have responded to cybersecurity incidents on behalf of insurers. We've had people who have assessed cyber risk pre-bind to help insurers make decisions on what they want to insure. And lastly, we have team members who have got experience of ingesting vast amounts of cyber data in order to produce risk metrics.
Now, you're convinced that cyber insurance will actually help reduce these hacks in the first place. Why are you so sure?
It's all because it has an impact on the bottom line, and that makes boards sit up and take notice. If you look at why cyber insurance is growing, it's concerns such as risks to business interruption and therefore loss of revenue. It's the liability impacts of having a data breach, or it's things like a procurement manager requiring that their suppliers hold cyber insurance. All of that then has an impact on how much your profits are each year. And you want to ensure that you're improving your security to affect that cost. Of course, in order to do that properly, the premium that you pay has to reflect the risks that you pose the insurer. And it's ThreatInformer's cyber insurance assessments that will help us to do that through the insurance industry for the millions of SME clients globally.
How can the questionnaires that you use with cyber insurance lead to effectively sort of shopping cart abandonment, if you like?
Absolutely. So as we've discussed, this is a really complex area, and that lends itself to long, complex proposal forms. Put yourself in the shoes of an insurance buyer, probably someone who has a finance function. They look and they realise, I need to engage with 5 different parts of the company in order to answer this question. Am I really going to put myself through that pain? And therefore that can lead to the abandonment. But even worse than that, what can happen is the buyer of insurance makes a best guess at these answers and gets lots wrong. And that means that an underwriter is making a decision on providing a policy with poor information and therefore making an incorrect decision.
The trouble is that, you're caught between a rock and a hard place, because if the form is too long, that's bad. None of us want that, as you've said. But likewise, if it's too short, you're not then gaining all the information that you actually need. So how do you deal with that dilemma?
Absolutely, that's at the core of ThreatInformer. We took a look at this problem and said, well, the way to do this is to ask for the minimum information, but then go and seek out really good information about the company as a whole. The only information we ask for is the company's name and its website address. From there, we use data mining techniques to understand all of the internet-facing assets of that organisation, and that forms the scope. We collect information about and from those assets, and within the context of an insurance policy, we then present a view of the risk.
Tell us a little bit more about ThreatInformer and exactly what it is that you do, what you've just outlined.
First step is for us to understand the full scope of the organisation's internet-facing assets. We do that through a number of algorithms supported by targeted machine learning. Once we have that and a view of all of those assets along with the social media data that we collect on companies, it allows us to collect information about, say, the way that things are set up, the security configuration that we see, the popularity and use of each part of the IT infrastructure. And that really valuable, colourful data allows us to then assess the risk effectively. And we do it within the context of an insurance policy. So we are not just looking at what risks the company has, but what part of those risks is transferred over to the insurance company writing the policy.
And what makes it more informative than other cyber risk ratings?
2 key areas. Firstly, it's that focus on insurance. So we're delivering answers to the questions that insurers really have. And also, it's the fact that our data is collected, verifiable fact, so that you can really rely on it, as opposed to those proposal forms that may be incorrectly filled out.
You talked earlier on about brokers. So let's say, for example, that I am a broker. Talk about how we're going to work together.
Well, as a broker, some of your key areas that you need to address is making sure that you're highlighting and advising your client appropriately on their risks. It's identifying the right kind of cover to go and seek out for your client, and also to help get the best price for that cover. And we help address all of those areas. Our reports can be shared with proposers so that they can see how their cyber risk is affected by their posture. We also help identify how that maps to a policy and show key areas of cover for that proposer, and then the broker can go and seek out that cover and provide the right policy. And also, by providing our data to an underwriter, they can go and negotiate the very best rates.
Actually, I was going to ask you about underwriters because you also work with them. So what's your relationship with them?
So for underwriters, because they're taking on the risk themselves, they need to be really sure that they understand those companies. So our automated cyber risk metrics look at the risk, map it to that insurer's specific policy, and allow them to make really clear decisions. The other benefit, of course, is they can provide our broker tool to help their distribution as well.
We've talked a lot about automated risk assessments today. For key decision makers who are actually watching this interview, what main takeaways would you like them to have?
Firstly, is your solution designed for insurance? Does it assess the risk that's actually being transferred? Secondly, does it rely on lots of questionnaires? We've already discussed some of the challenges that brings to the table. And lastly, is it something that is understandable by your proposers, by your brokers, and by yourself? Because if it's not, then it's not fit for purpose.